Welcome to Neuron paper trading on the replay, the E-mini Nasdaq 100 futures. This is what I'm currently trading right now. So we are just gearing up. We're paper trading. We're doing the replay for what is the date at this time? The 19th. We just turned into the 19th. You can see I already got one trade in for $18. And I'm currently in a trade right now, and we're gonna get started. Let's go ahead and let's see how this goes. Let me preface all this with this is not financial advice. This is for entertainment purposes only. We are doing this to kind of have fun, get better. Maybe you might learn something from it, maybe you might not, but the point is to be entertained. So that's why I do this. I do not recommend trading like I do. I do not recommend trading for the faint of heart. It is hard. It is not easy. It will not make you rich. You will not become a stonk bro. You will probably go broke. So I don't recommend any of this. Outside of that, let's go ahead and get started. And what I have here is we're looking at the Tokyo, and it looks like we're coming off of a high. Unfortunately, I can't go back any further than this. My time frame and my subscription does not allow for further testing. So this is as far as I can go now. And based off this, it's looking like we're on an uptrend. So I'm following that uptrend. We hit the bottom of this line here. After breaking out down here, price is climbing back up. So it seems to me that it's a probability that we may probably hit the top here, that we might hit the top here and then continue. So that's the play I'm looking for. And I am not like ignorant to the fact that it could break here and then do the opposite. Because in the world of trading, anything is possible, and you have to be ready for everything. So my first trade, I got in down here, and then I closed up here, and then I got in again right here because my trade closed too fast. I was hoping to get in a little bit more. Plus, I went in with four units instead, or 4,000 units instead of. I think it's 4 units. I'm used to trading 4x, so the numbers. It's been a learning process trading the Nasdaq, from trading 4x to trading futures. Also, it's a lot to learn in a short span of time. Anyway, let's get on with it, shall we? So we got it at 0.03. That's our speed, because I don't want it to be super fast, because I don't want to get used to that fast pace, quick action. I kind of want to get used to the that sinking sensation that you get when you're in a loss, and that anxiety that you get when you're in the money. I want to get used to those feelings and be able to talk my way out of it. And you can see reset my account, my paper trading account, to $1,000. So I will be using 10% per trade. So we will allow this to go up to $100. So we can take that. I mean, we'll take it to about 75. And then as we add size, we'll adjust accordingly. And we might even close depending on what is going on in the market and what we see price do here. Will it bounce here, or will it continue up? I don't know. We'll see. It's probably best to get yourself into trouble. Yeah, not looking good. I should probably close. Let's see. Hold on. Let's see. We got we're going into the London Open, so we're touching down here. Let's try looking at the candles and see what the candles tell us. Absolutely nothing. Fantastic. Swell. So price comes up, breaks down, and I'm trying to deal with the information I have at hand. So um, it's kind of an exercise for me. I'm trying to get used to trading in the moment. So this is what I see. This little section is what I see, and I usually go by what I see and what I'm trading. So this could come down, and then it could come up, and then it could drop again in the minute time frame, because things happen real fast on the minute. And one thing that I'm learning, which should be blatantly obvious, is that you're not going to catch runners when you're trading on the 1 minute time frame. You're going to catch something like this and get lucky, but you're not going to catch one of the big moves on the higher time frame, because you can't expect to catch that. When you're working on the 1 minute time frame, the 1 minute, 3 minute, 5 minute, you have to expect really quick wins, like in and out, in and out, in and out. You can't expect to catch the 100 point moves or the 200 point moves, because that will get you wrecked. That's what makes you blow your account. That's what makes if I was buying here and then I kept buying, thinking prices going up, look at this move would utterly destroy you right there. And then a repeat right here, and then of course the price is coming down. So you have to play it quick. Should I get out? Should I stay in? 10% of my account is what I'm willing to risk. We are already at $50 roughly, and if my little analysis that I made right here is wrong, then, well, I'm out of luck, and I should probably just close it. I'm just going to close it and reset. Let's wait and see what happens when London opens. Because if I was a bullish bias, right here would have been the best place to buy, and then around this line here. So it would even probably benefit me to bring this down to here. I think the best idea would probably be right here, because it broke above, but it didn't completely break. It rejected and it came down. And then this one, you can see right here we have a lot of action going on around here. And so if we follow this, where it broke below and then came back up and bounced off here, and then bounced off up here, and then came down and broke below, and looking at this, now we have to think, what are the possibilities? What are the moves that we can see happening? We have a bearish move, a slight bullish move, but we're testing this area right here that we've tested before. So the possibilities are we get rejected. That's one possibility. The other possibility is that sellers were pushing down so they can get a better price to buy and take the price back up. So those are the two possibilities, the high probability trades that we have going on right now. And we have this leading into the London Open. So I'm going to stay out of it for a while, and we're just going to watch and see what price does. If I miss any move, I miss the move. So let's see. Okay, so it broke back above, hit the line. You know what? I'm going to go back with my bias, and we'll go with our $5 and see what happens. It looks like we already hit our take profit. All right. And now we're bouncing on top here. So do I want to continue buying? Let's keep buying. I'm going to stick with my bias. Already negative 20. Oof. It hoits. Oh, that hoits. That really does. All right. So I may have gotten into this a little too soon. So now I got to make a decision. What do I want to do? Do I want to get out? Do I want to get in? What do I want to do? I guess we can close this because the paper trading doesn't really work with the replay, so it doesn't matter. But we'll have to assume that I have $1,000 account on the replay. Now, I can buy and bring our average down here, and then that gives us a closer window to get to break even. And there we go. So now I can just close it. Bam, closed it, broke even. And price continued up. That happens, and you can't take it to heart. You can't take it personally. This trade was looking really bad. Right now, there's a lot of volatility happening right here, a lot of up and down. So I'm kind of just relieved to be out of this trade with $1 in profit because, like I said, I should have waited until London opens. So that's exactly what I'm going to do now. I'm just going to keep waiting. And then when London opens, we'll see where we're at. But let me talk about the smart play that we did, where we opened up. Sorry about the uhs and the ums and the ers. I just did it again. I'm gonna try to get better at speaking. Maybe if I really think about what I'm gonna say. So we bought here, and then price moved against us, and then we bought another order here to bring our average to the middle here. So that was kind of a smart play just to get us out of this possible bad trade, because this could have kept moving down. It could have come up, retested this area again, and then rejected. So I got to commend myself on that one, getting us out and then closing at break even in here just to reset and to see what price is actually doing. So let's continue to watch. So it's looking like it's going up. And here comes London. Okay. All right, so let's look at this. You see these were our two high probability trades. The one right here where it hits, rejects, and then price comes down, or price comes down and then just bounces up. And we can see where it's at now. And this, once again, let me remind you, is the 1 minute chart. So you were looking at either catching something like this move right here, and then getting out. If I would have gone in for a sell and thought, okay, this is going to reject, my plan would have been to catch this move right here. Just this little bit, because this is the 1 minute chart and I'm not expecting to catch runners. Just this move right here and then get out. If I was going to stay with my bullish bias, I could have come in here and then caught this move right here. This would have been all I could expect on the 1 minute chart right here, and then close. If you're going to trade higher time frames, you can catch more points, but on these smaller time frames, it's not realistic to catch big moves. You can catch just little moves like this and then get out. So let's continue to watch. Okay, now we're in the London session, so let's see what we're gonna do. Let's close these because these have already played out. What are our options? What are the high probability trades that we're looking at here? We're looking at price continuing to go up, breaking, and then testing, and then continuing. And we're also looking at price coming up to here and then rejecting. And these are the moves that we're looking to catch. We're not going to catch hundreds of points. We're just going to catch a few points right there and possibly right here. Just these moves right there. It's not realistic. You have to get that in your head when you're trading the smaller time frames. You can't catch the big runs. You just got to catch these small little breakouts and these quick little moves. So let's let it play and see what we're going to catch. I'm already, my bias is still bullish. I'm thinking it's going to go up. So if it comes down here and bounces up, I'm buying here. I'm buying all this area right here. And then if it breaks up, I'm buying all this area right here. So let's see what it does. And we will play accordingly. I feel like this might be a good time to get in. Yeah, that would have been a great place to get in. Okay, this is a better place. So let's take our stop loss, our take profit right there. And let's enter another order to bring that down because we're looking like we're going to test this one. So let's see what happens. All right, we're already back up. So if my bias was bearish, this would have been a great trade to catch right there. So let's we can even see what would have happened if I would have gone bearish. So let's go right here. Let's replay that. And this is exactly why you're not trying to catch the big moves. You're just trying to catch these, just a move right in between this section right here. And it looks small. When you go to the higher time frames, it's kind of small. It's a small little range we're moving in here. But when you really get into it, you stretch it out and you're like, man, these moves look huge. All right, so let's say my bias is bearish. I want to go in for a sell here. And I'm expecting price to at least come back to this area. So let's play. All right, things are looking good. Really good. Oh, fantastic. I could even close it and be happy. And I think I would, because like I said, we're not trying to catch the big moves. We're just trying to catch these quick moves that earn you a little bit of profit. And you do that over and over again in a range, you can make a decent living doing that. And that's the kind of trading I like, because I like being in the market. I like trading. I like watching the action. I like the participation. It's not for everyone, but it is for me. And maybe in the future, definitely in the future, I'll move up to the 15-minute, then I'll move up to the 1 hour, then I'll move up to the 4 hours. But right now, I'm just super comfortable playing in the 1 and 5 minute time frames. That's where I'm comfortable. That's where I feel like it's home. And until I get better and really understand the moves, that's where I can lose the least amount of money. So that's why we're trading in the 1 minute, because I can cut my losses quick. So that was that. You caught this move right here. We made $37 on it, and we're happy. So let's get back to the bullish bias. Where was it? We were looking for a good price. We got in somewhere around here, and we were in trouble. So this is where we went in. And we put our take profit right there. And we're expecting a price move. Actually, we're expecting the price move to move up to about here somewhere if it breaks to the upside. So that's what we're going to catch. And then we're willing to risk $100. I'll put it at 75 because if we add to our size, that'll take us up. And then, of course, we know that price is going to come down here, but we don't know what's going to happen after that. So price drops. Things looking good. And things are starting to look iffy for us. So let's buy another here to bring that average down. Maybe we can break even. Maybe we come to this point at least. So we got a range, small little range building right here. We're already up. We could close and be happy, or we could let it ride and be anxious. Right here, take profit of $5. And we are getting close to our stop. So once again, dealing with the smaller time frames, this move from here to here when we were in profit $20 would have been perfect because our original profit is $5. We're looking to catch $5 every time. This move, even though we had to open another order down here, would have taken us to 4 times what our original profit was. We should have been happy with that. Now we're caught here. We're looking at price bouncing down again. And the possibility is price keeps moving up, it drops. Price moves up, it drops. Price moves up, but it's not moving up as fast as it did here and here. It's taking a couple detours. You know, it's creating a range, like a real sideways movement right here. The only thing that makes me want to hold is this move right here. This aggressive buying move right there. That's what's keeping me in my buying bias. So I'm going to let it play and see how bad it can actually get. And if it breaks even, we break even and I'm out of there. But it's not looking good. So now I really just want to get out, even if it's at a smaller loss. And New York has opened. And I'm going to close. So what did we learn? We learned how to stick to your bias, which may not always be appropriate. You may not always be right, but I'm not going to jump between buying and selling. If I say it looks like a buy and I'm going to be a buyer, so I'm going to look for the lows to buy. Lows to buy. Down here would have been a great place to buy. Down here would have been a great place to buy. And I'm going to stick with my analysis. My analysis told me that price is going to go up here, and that's what I went for. So when I saw price move here and I expected it to bounce here and move up, it didn't do that. So we had to work our way out of this problem, and it took a while, but we finally did. And of course, we'll do the same thing here. What's going to happen with price? What are the possibilities? And that's essentially what you have to keep doing. You have to keep asking yourself, where can price go? What is the next possible move? And what do I need to do to prepare for it? Preparing for it is usually just waiting. If I was expecting price to be bullish, then I would have waited for it to test the lower level, would have been the best move. But because I saw this move, I was thinking, okay, buyers are aggressive. They're going to keep buying. And they weren't as aggressive as I was hoping. And they kind of let price come down a little bit more before it came back up. If I was just a little bit more patient, though, I could have got in here, a nice buy. I could have got in here, a nice buy. But the thing is, you never know. You make a decision, and you have to work with what you have. You have to work with the move that you're in. Anyway, short session today because I got to go eat dinner because it's almost time for work. I was hoping to get a little bit more trading in because this kind of thing is fun. And, well, that's that. So I hope that was informative. I hope it kind of gave you some insight into the process of trading, how the brain has to work, how you have to question yourself and anticipate moves. But I hope you were entertained. That's the ultimate point, because that's why I do this, to entertain. And other than that, viewer in the back, thank you so much for watching. I hope you enjoyed it, and I hope you learned something. Everyone else, thanks for stopping by. Of course, always remember, neurons that fire together, wire together. Now go out there and make some money. Just don't make it like I do, because I'm breaking my back here.